Cool. Sorry, let me get started again. So I was just going to say the beauty with an FAQ is that there's no real structure to it. And what is important, if I just share my screen here quickly with you, is that it's literally unstructured. So I enjoy these the most because personally I get to answer whatever people need to know, but it's very much a Q&A. Again, I'm not giving you financial advice. It's really important that you understand that I'm sharing with you my own experiences, my own knowledge, my own mistakes, but I'm not telling you what to do. You get to make those decisions for yourself. I think that's very,
Scott,
yeah.
just one thing, your converting meeting recording is covering the screen.
Sorry. Okay. Thanks. So yeah, just I'll share with you all my knowledge and my mistakes and everything else. I'll try and help you as much as I can, but I'm not telling you what to do. I'm a big believer, if you didn't pick that up from that slide with the building, that we're all about empowerment and we all get to make our own decisions in our lives in terms of where we're at. Okay, so this is all about questions, and I've got a bunch of questions that were sent through. Shane very kindly chucks them into PowerPoint for me. And but just before I get going, if anyone is here live and wants to ask questions, I always like to give them preference. So there's two ways of doing it. One is you can chuck it in the chat box and literally just, ask whatever you want, and or you can just put your hand up. There's a little reaction button where you can literally put your hand up and I can, you can ask me face to face. I know some people hate public speaking, so you can type it if you want to, I don't mind. But yeah, ladies and gentlemen, how can I help? Any questions from anyone who's here live before I pivot to some of the ones that Shane's put in here that other people asked? Gavin, nice to see you, Captain. Is summer coming along there?
Scott, it's been the longest wait ever, and it's finally here. I'm so chuffed. Thank you.
Look, I'm not going to tell you guys that we're at the end of April and I've got my fan on here because it's still too hot. Okay, so Maria, thanks very much. Yeah. Well, just before
I would like to.
Sorry, just before we go to your question, thanks for letting me know about that. That's sad news, but we'll take that offline.
It's live, eh? Scott, I would like to know, I've always talked about diversification to my followers, and I would like to do a Zoom video about this and just add it. And I would like to know, do I share my normal affiliate link when I do this, or is there a special affiliate link for this?
Sorry, so let me just clarify the question. You want to share that recording with your followers? Is that what you're saying?
Yes, because I've always spoken about diversification, and I mean, why repeat something if I normally send them to the best, and that's what I want to do. And I just want to add my link to it. Which link do I use?
So firstly, thanks for the compliment. I appreciate it. And secondly, Shane, could you give guidance on this? So Shane's my partner who's far more intelligent than me. I'm just the talking chicken on the stage. Shane actually runs the whole team. So Shane,
yeah, sure. Cool. Sure. We actually do have a affiliate portal that you can sign up for. I'm not sure if you have or haven't.
I have an affiliate link. I just want to make sure, do I use the same affiliate link for everything?
Yeah, so it depends on the event, but what I'll do is let's you and I connect after this, and I'll show you exactly how to do it. But if anybody else is interested, I'll just pop the link into the chat as well.
Just by the way, I'm just showing you the system that Shane is talking about. So we use a system called First Promoter, and yeah, basically in simple terms, it's all digitally trackable and everything else. And it sort of makes it easy for people. So like Maria's saying, if you want links or whatever, and our whole philosophy is back to that Zig Ziglar principle. The more people we can help, all of us collectively, the more we can get what we want. So I don't think it's win-lose. I think it's win-win. And I want to be very clear, there's no pyramid scheme here. Like our logic is that it's helping people help each other to get results. So thanks, Maria. Yep, please, Jenny, fire away.
Hi, Scott. I've asked you this question before. Can you hear me okay?
Yeah, got you live, yeah.
Okay, so I'm in my mind comparing your investments to just buying shares, for example. that then just grow in value, and then when you sell them, you pay capital gains tax on your growth. Okay, so presumably we do that at the end of your investment, but the money's tied up for 5 years or whatever your deal is for. Is that correct?
Yes and no. So remembering that the beauty on the platform, in fact, if you don't mind, I'm just going to share the platform because I think it's easier to share it live for you. Here we are. So if I log in here, you'll notice if I go to the marketplace, there's different deals. So both of these that are available right now are both 5-year deals. But if you go through, like our Manhattan deal that we closed at Christmas was a 1-year deal. That's a 3-year deal. That's a 4-year deal. On average, it's kind of 3, 4, 5 years, but there are 1-year deals, you know. So if you go back to, if you look, most of them kind of 3, 4, 5 years, which is kind of a standard term for investing. But there are deals like the Manhattan one. This one was 12 months, 1 year. So to answer your question, it's what we talk about with diversification over time, is that you've got different investments with different assets and different partners with different time frames. And so the way I would answer that question for you is twofold. The first way is I want to share with you something that we did with our mastermind back last year. So it's actually nearly time to redo it this year. And what happened was we got the lady, her name is Fiona, and she came in and she basically used to work for Knight Frank, and she did what's called the wealth report. And every single year, Knight Frank do this wealth report on the top wealthiest 500, I think there's 579,000 wealthy people in the world. And they go and they look at all of their different assets, what they invest in, etc. So she came and she gave us, as part of the mastermind, she gave us a full review of the different asset classes. So just to put in perspective, here it is, there's 579,000, and they go out and they review all of the assets. And what I found really interesting, and what she shared with our mastermind participants, hopefully you can all see my screen here, was that to answer your question, if you take 100% of their portfolio, 26% was in equities. So I'm not saying you shouldn't be in the stock market. I think it's just important to contextualize the benefit to being diversified. You know, 21% was in commercial property. So again, I'm not telling you what to do. I'm just telling you what the wealthiest people in the world are doing. So they had 26% in equities, 21% in commercial property, but direct ownership, which is exactly what we're trying to do. They had 17% in bonds. They had 9% in private equity, venture capital. They had 8% in commercial property indirectly through funds, 7% in other, 5% through REITs, 5% in things like cars and wine and art, 3% in gold, and 2% in crypto. And so, Jenny, I'm not sure if I'm answering your question directly, but what I'm learning, both through the privilege of working with Calio, the family office, and all of their wealthiest clients, and obviously these type of wealth reports, is that the key to diversification is about your portfolio construction. And so I'm not saying there's anything wrong with the stock market. I think the problem is if you've got all your eggs in the, let's call it stock market basket, and for some reason that goes wrong, you've got all your eggs, you've got a problem. Okay. Equally, if you put all your money into, I don't know, medical office in America, and that goes wrong, you've got a problem. It's the same with any asset class, is I suppose what I'm trying to say. So there's two different ways to answer your question. That's the first thing you asked about the stock market versus investing. And I fundamentally believe, you know, not just on my own opinion, but based on all the research, you have to diversify. And then secondly, your question is how and when do you pay tax, and how does it work, and the capital, and etc. And that's obviously might be different per different investments. Whether it's the stock market, where you effectively, what I'm hearing you say is you're primarily focusing on capital growth versus income. But it's the passive income that's going to give you the freedom. It's buying Coca-Cola shares and getting dividends that are going to give you the freedom. And whether it's Coca-Cola shares paying you a dividend, or whether it's an industrial property in America or a mixed-use property in Germany, they're going to be taxed the same sort of way because it's dividends. Does that make sense? In terms of your income, and then your capital and your capital gain only gets taxed on exit, basically once the building exits. What a number of investors can do, and I don't want to get into too much tax advice here because it comes personal to everyone, but there is a way to roll over your investments from one to the other and not effectively get the capital gain because you're rolling it into the next investment, because you're not actually taking the capital and using it, if that makes sense.
Okay, but my second question is actually to do with the income. Now, you said interest or slash dividends. Now, if it's interest, you get taxed as if it's income at your top tax rate, if you're at the top tax rate, 45%. Or if it's a dividend, sometimes the dividend tax has been taken off and then you can keep the whole lot. So that's why I was asking you, is it interest or is it dividend?
No, so in our case, it's so we try and do it as tax efficient as possible. So we do dividends primarily in terms of the process, unless it's a debt deal where you have to do it as interest. But in simple terms, we do our level best to make it as tax efficient as possible for every investor. And
Okay,
like you said, sorry, just like you said, also local taxes and everything are all paid, so it's a net return in people's pocket.
Okay, and sorry, and just one important question is, do you monitor how much people invest with you and try and keep them at their 1 million rand limit? I know Shift does that, and that's a bit annoying. Maybe you want to invest more than 1 million. Do you have to monitor that?
I don't know who's on this Zoom call, so I'm just going to answer it as we're a British company and I don't know what you're talking about.
Okay.
Help people invest internationally with whatever resources they would like to use.
Okay, thank you.
Cool. I hope I answered that question. Stein, if we invest in deals on your platform as when we have cash available, do you still recommend the masterclass? Yeah, so Stein, I think there's two different ways of answering that. Obviously, there's no reason you can't go on the platform and invest on your own. I think the question is, and I get asked this quite a lot, I know Alex does as well, it really comes down to, do you want to be part of a group of like-minded people so that you're on a journey together, a learning journey every single month, you're checking in, you're learning, you're having active sessions with new partners, you're being held accountable. I don't know if you're like me, but we're all really busy and you blink and the year's finished and you want to do something, but you actually haven't done it. Whereas you're checking in every month, you're making measurable progress. Do you want to have a family office that literally sits down and helps you structure all your affairs, your tax, your structuring? I mean, back to Jenny's point, how do you do it all tax efficiently? Do you want to actually have a partner in your corner that is your go-to person to help you with all of that? And then do you want to kind of have private sessions around the deals, exclusive access to certain deals that don't even get to the platform? And, you know, and yeah, so there's no right or no wrong. I mean, the platform Wealth Migrate has been built with the purpose of allowing everybody to be able to invest like the top 1%. That's our purpose. Our vision is to make investing as simple as a swipe of a finger. So we want to make sure that no one is excluded in that process. But the mastermind has been created for those people that want to be part of a community. Let's call it a high net worth community that truly want to be around other like-minded members that want to grow, learn, and invest together. And it really was a digital emulation or copy of our buyers trip. So 10, 12 years ago, I think I did my first one in 2011. We started doing buyers trips where people would fly overseas with me, about 10 people at a time. They'd fly overseas, we'd go look at properties, and we just built the most incredible relationships on that. And people love to be part of other like-minded investors. And so the mastermind is a digital equivalent of the buyers trip. And I mean, we do try to do physical. About 4 weeks ago, whatever, we did a live event in Stellenbosch. And again, we it's mainly digital because we've got people from England, Ireland, America, Germany, Italy, Portugal, South Africa, Zimbabwe, Zambia, Australia, New Zealand. So we've got an incredibly diverse group of people. I love it. We've got men and women. We've got different backgrounds. We've got farmers. We've got plumbers. We've got highly sophisticated business people. We've got auditors. We've got accountants. So it's just an amazing array and mix of people, entrepreneurs, obviously. And everyone gets to learn and grow from different people, different backgrounds, different geographies. So I don't know. It's hard to answer your question, Stein, because they're not. It's an apple and an orange. They're very different. I don't want it to be either or.
I'm adding the questions to the presentation if you want to bring them up on the screen.
Oh, okay, awesome. Thank you, Sean. Hang on, what's going on here? So I'm just trying to. Just start from the beginning. Yeah, so I've just answered that one. Okay, cool, perfect. Okay, next one. What is your investment opportunity pipeline looking like? So yeah, that's a good one. I mean, we've got the current deal. So I don't know what's going on with this. Why is this thing down the bottom? Anyway, we've got the current one in the industrial deal in America that's actually closing out this week. We've got a German deal that we literally launched yesterday with mastermind members. We've got a deal in Austin coming up, which should go live next week. We've got another multifamily in America that's currently in due diligence. There's a London deal that we're looking at the moment that's in due diligence. There's a private equity deal that we're looking at in due diligence. So we look to kind of have 2 to 3 live deals at any one time and kind of roll them over so that, you know, if you take that Ray Dalio equation, you could easily be doing 10 to 15 quality investments per year. We have no intention of it being a marketplace like a flea market with 30 deals at a time because we'd rather have quality than quantity. Is it better to take your money completely out of South Africa or invest from here, but then your money has to come back? Yeah, so look, from my experience, having done this for 20 plus years, pretty much everyone, I could probably count about 5 people on less than 5 fingers that had the intention of taking it out and wanting to bring it back. So they externalize the cash legally. They use the R1 million allowance and all the, whatever it is, 10 or 11 million that you're allowed to use per year per person. They take the money out legally, they invest overseas, and then they tend to leave it there and allow the returns to accumulate. Yeah, from my experience, and it's one of the reasons you don't want to do it in a South African trust or a South African PDY, because you don't want any connection between the two. So you must understand that I originally am from Zimbabwe and have 3 farms in Zimbabwe, and so believe very strongly in diversification. I don't know how to say it any other way. Are there any other asset classes coming onto the platform? Yes. So we've got venture capital. We've got private equity. We've got venture capital. We've got we did first mortgage debt, the Manhattan deal. We've got equity in commercial property. We've got obviously the different asset classes of commercial property. So our intention is very much that. And then there are other asset classes that come in through the mastermind. So through Calio Private Equity, we've got opportunities through Calio Family Office. We've got access to their structured notes, to ETFs, and through another partner that we just launched now, we're doing a crypto investment specifically for the mastermind. So to answer your question, at a Wealth Migrate level, it's primarily alternative assets. And then at a mastermind level, that makes it easy for people that want to invest in the platform and do those alternative assets. Plus, we've got partners that can help in other assets that we don't specialize in. Do most deals usually make their targets, the return that is advertised? Look, that's a brilliant question. And from my experience, it's about 8 out of 10. So again, that's why I love the Ray Dalio thing. It resonated so much to me. If you do 10 deals, the chances are about 8 of them should work, and 1 or 2 are not going to hit targets and 1 might not even perform. If I stood on the stage and I said that all deals worked, I'd either be lying, cheating, or stealing, because there's no ways in 20 years that you're not going to have made mistakes. So it's just guaranteed. And so from my experience, it's one of the reasons why diversification becomes so important, because 7 to 8 deals will and should hit target returns, and 1, 2, or 3 don't. But also things happen, like we've got an incredible partner in America called Feltman Equities. They manage $3 billion. They've been around for 40 plus years. And we did a deal with them about 2 years ago, and they've outperformed all their targets, but they didn't foresee this interest rate spike, which most people didn't. And because of that, they've had to do a capital call. So that deal has not worked according to plan, through no fault of their own, because they've literally they've outperformed everything in terms of their targets, but the market changed. And so these things happen in terms from an investment perspective. But generally, we like to work. I mean, the gentleman we worked with just yesterday when we launched the German deal, very, very conservative person. We like to work with people that are conservative, and I'd much rather have conservative numbers and hit them consistently than to have wonderful fantastical numbers and come nowhere close. I've heard in your main presentation, you saying this is not for new beginners. Why is that? So the mastermind is not for brand new beginners because it tends to be at a medium, level of sophistication, if not higher. But there are plenty of ways to get started as a beginner. We've got lots of things. We've got the challenge that you can come to. Maybe, Shane, if you can chuck the links in the chat box. We've got the investor roadmap that you can come to, where we literally take you on a journey on how to get started. We've got the university, wealthuniversity.org, where there's a plethora of courses. Then if you want to pay, you've got Wealth. Those are all free. If you want to pay, you've got Wealth Going Global, where you can literally get access to all the knowledge, in our opinion, that you need. If you want to do asset mastery, you've got access to the partners. So remember that our purpose, and I've said this already, is to help everybody invest like the top 1%. But people are at different levels. And so think of it like an airplane. The airplane flies from Sydney to London. Some people are in economy, some people in business, and some people in first class. Think of it like all our free things are the economy. You've got access to the university and Wealth Migrate for free. You can both learn and invest for free. You've got business class, which is our home study courses, where you can pay things like Wealth Going Global and Asset Mastery. And then you've got the mastermind that is like our first class, where you kind of get picked up in a limo and given champagne before you take off.
Scott, I've just dropped in that link for the next steps. I don't know if you want to just share your screen quickly.
Share my screen.
That just shows everything. So just click on the link that I've put into the chat, which I've shared for everyone. It's just our next steps.
Oh, brilliant. Yeah. Oh, thanks very much, Shane, for this. So yeah, you're going to get this next steps, and everything I just said there from Shane's perspective is here's all the learnings and here's the investing. So for free, okay, if you're a complete beginner, or if you're intermediate, or if you're advanced, here's the learning links, here's the investing. And if you want to go read about them, here's the university, here's Wealth Going Global, here's the challenge, here's the masterclass, there's the investor roadmap, and there's the investing on the platform. So as usual, Shane has made it incredibly easy for people. Well, we believe hopefully as easy as possible for people to be able to help you. Okay, I hope that, sorry, I don't know who people's names are, so I hope that answered your question. If it didn't, just chuck it back in the chat box and I'll try and answer questions. Okay, do you guys recommend or use any preferred brokers to do share dealing? No. So I mean, this is not a game that I'm going to sit and try and talk about. In fact, one of the reasons we brought Callio on as a partner in the mastermind was we know what we're good at. We're good at alternative assets, investing internationally, and diversification. What we're not good at is tax, structuring, pension plans, the stock market, equity investment, that sort of thing. And so we partner with them. And that's why between the two of us, we can provide people with a holistic solution. I think that they use, and I don't know if Alex is here, Shane, but I think they use Interactive Brokers and Swissquote, which are the most cost-effective ways of doing it, but they still help manage the whole process. And I only now speak for our mastermind clients. But yeah, I don't have a preferred broker. And you might, again, I've personally used Armara. My uncle was one of the founding members of Armara. So they've who I've used personally. Around the world, you've got platforms like Easy Equities and Robinhood and all of that are much more cost effective. Are there any other questions? Let's see here. Have you put all the questions in, Shane? Is there anything else? So ladies and gentlemen, come on, we've got some more time. Hit me with them. You've got me for free. How can I help? What's blocking you? Sure, Joanna. Which is a good asset to go into once interest rates start dropping? That's such a loaded question. I'm going to stop sharing because I don't have any PowerPoint to share with you. So I know I'm going to sound biased. Remembering it's always important to understand where someone's coming from. So if you talk to me about diversification and you know that I came from Zimbabwe and 3 of my farms got taken away from me, you'll understand why my confidence in Africa and property rights is not very strong. And you'll understand why I believe so much in diversification. When Joan asked me that question, you know, for someone who loves business and loves property, the chances are I'm going to err back towards property. However, let me try and give a more balanced approach. I'll try my best. I'm not the guy that should do equities or talk about equities. But what I do, and let me just do this quickly because I need to go all the way back to find the slide. So just yesterday, Anthony does this presentation every single day for, sorry, not every day, every month for our mastermind clients. So we call it a TED Talk. So I personally, if you talk to me for 4 hours about the world economy, I'll fall asleep. Give me 18 minutes. Tell me what I need to know, what's happening in the world, and let me ask a few questions. And so he takes me through all the different stock markets. Sorry, not me, the mastermind members every month. But this was the one that I wanted to refer to, because what he basically was showing was that over all the different interest rate cycles, when the interest rate starts changing, this is the kind of the growth that's expected in the equities market. So you can see the S&P 500. Okay. And he said on average, and I'm just remembering from yesterday, that you're going to get about a 14% return over a 12 to 18 month period once they start to drop interest rates. Okay, so just really interesting, this graph. You know, this is what he was talking about, and the fact that we're currently sitting in a band of 3 to 4%, and they want inflation at 2%. And the challenge with Iran at the moment is that that expects to put petrol price up, and if petrol price is up, that's going to keep driving inflation. And within, you know, they were expecting 6 rate cuts in America this year, and after yesterday's data, they're now only expecting 2. And then finally, you know, what is the risk appetite? So you can see there's actually quite a lot of risk appetite in the market, even though the economic momentum is still kind of below. Now, why am I showing you all of this? To answer your question, what he was trying to say is that there's been massive growth in equities over the last 5 months, and he believes that a lot of the pricing has already been, that 14% that's normally on average has actually been brought forward because the market expected rate cuts. So yeah, he was saying, look, there's an expectation of growth, but please understand the market's been predicting this for a while now, and they reckon they've forward priced that in because the markets have gone up so well in the last 5 months. On the other side, if you take property, you know, when there's high interest rates, it has a dramatic impact on property. It makes it a lot less affordable. You get a lot of distressed sellers. And so whether you're talking America or Germany, both of our partners at the moment are in kind of vulture mode, where they're picking up great deals based on distressed sellers. So both of our deals at the moment, the one in America and the one in Germany, are both being bought off a distressed seller. What tends to happen when interest rates go down is that, you know, when interest rates are high, I mean, I don't have time today to go into a full commercial property course, but when interest rates are high, cap rates are high, which basically means property is cheap. And when interest rates come down, cap rates come down, which means property goes up in value. So it's a very good time to buy property in a high interest rate cycle if you can hold it, because when interest rates come down, the market values go up. And that tends to be the same for other alternative assets. But I'm not going to sit here and try and sound like an expert when it comes to bonds or, you know, some of the other asset classes. I know that private equity is very resilient to these movements. And that's one of the reasons why wealthy people invest in private equity, because it doesn't move up and down based on these sentimental swings around interest rates. So I don't know if that answers your question. Sort of my gut feel, trying to answer it. What kind of updates do you provide after investments in various projects? Heidi, I think it's Heidi. Or yeah, Heidi. We try. So actually at the moment we've committed to, we're doing a weekly investor update just around all the deals and what's happening and getting all the dividends paid. We do, in simple terms, most of the deals are paid quarterly. And so at the moment we're just trying to catch up. There's a whole bunch of dividends that are being paid out to everyone, and we're wanting to make sure there's transparency. But ideally you'd do a deal report once a quarter. You'd be paying the returns once a quarter, and then you'd be getting a deal report once a quarter. But we do try live up to our core values of trust, transparency, and alignment, and have as much visibility and transparency as possible. It's not always possible because sometimes we've got to get the information out of the partners, but yeah, I would say once a quarter would certainly be our target. Scott, did you cover crypto, specifically Bitcoin? Do you see utility in South Africa? Ashton, funny enough, as part of the mastermind, we did crypto last month as our asset class. So I brought in a very successful crypto investor. He's an economist by background. He's an older gentleman. He's in his 50s. I like that. He's conservative. He's not going to tell you he's going to turn $1 into $10 million in 3 seconds. And what we've done with our mastermind group is we've created a specific group of us that are investing alongside him. So very much investing in about 50. No, hang on, let me get this right now. Actually, I need to check my notes. It's either 20, I don't know, Shane, if you can remember, it's 25 or 50% is in Bitcoin and the rest is in altcoins. Do you see utility in South Africa? I'm not sure what you mean about that. There's many ways I could look at that. Utility, we have our own crypto, which was a utility coin. And we're waiting for the security regulation to come in so we can do a security coin, but I'm not quite sure what you mean by utility. Jana, thanks very much for that around the time. So we're very conscious of time zones, and I know you're in America and you had to get up in the morning for this. We've got a few Americans that have joined actually recently. So we didn't have Americans. So we tended to try and focus on England, Europe, South Africa, Australia, New Zealand to kind of take them into account. Now that we've got Americans joining, we're going to be more flexible around that time. Specifically when it comes to the mastermind, though, it's not actually up to us and or our participants. It's up to who the speaker is. So as an example, if I've got a presenter who's in San Francisco, like they're giving of their time for free. Like we don't pay anyone. Like they come to teach us about the asset classes and to allow us to invest alongside them. We arrive when they can help us. Like they're not going to wake up at midnight to present to us. So it's if we want to be global citizens, we have to think like global citizens. It's only, once a month, and we check in with the right partners. And quite frankly, we're available when they're available to learn. But I think it's a very valid question, Joanna. I don't know if I'm pronouncing your name right. I apologize if I'm not. But we are very conscious of time zones. And Shane loves to make me work at stupid hours as well. So, I'm trying my best to change that. Maria, SA crypto exchanges are regulated last week. It's now available, I know, in Standard Bank as an asset you can invest in just for interest's sake. Yeah, no, great. Look, I know that Calio has given me stark warning to talk about crypto in South Africa because it's now highly regulated. So I'm not going to sit here and I've got 100 million disclaimers as to I'm not giving you advice on crypto, which again is one of the benefits of the mastermind because it's a confidential environment and everything that we say and do is confidential. Whereas obviously right now this is a public environment and I've got to be careful what I say. But yes, around the world they are trying to regulate it. Let's be frank, why are they trying to regulate it? So that they can tax you. Sorry for my conspiracy jaunt. Any other questions? Anything else I can help with? So if I don't have any questions, I'm going to use this time just to share a little thing yesterday. So we had a fascinating thing happen yesterday. So I've been wanting to invest in Germany. I've sort of mentioned a little bit earlier for 20 years. I've traveled all over Europe, literally. And just because you've traveled somewhere doesn't mean you can invest in that place. I went to China in 2003 and I wanted to, 2003. And I wanted to invest in Shanghai and I couldn't even order a plane ticket, let alone buy a property. It was impossible. And so one of the things that I've always focused on with investing is to invest in English speaking countries where the law was something similar to what I would understand. So South Africa, England, Australia, America were all kind of common sense. To go to Germany is a whole different story and or anywhere else in Europe because it's a whole different legal system, a whole different language. And quite frankly, I had the awareness to know that even if I was buying a house, they would see me coming and I'd be cleaned up, seven love. And it was really interesting, over the last couple of months, we tried to get into Germany in the middle of COVID. There was an incredibly good opportunity. We had to put in 700,000 euros and we had to put it in 2 weeks. And we just didn't have the time to participate. We couldn't get it on the Wild Migrate platform in time, etc. And it's actually the reason we created the mastermind. Because what we wanted to do was bring a group of high net worths together that if we needed to take down a deal, we could act very quickly, even outside of the platform, and then reverse the deal onto the platform afterwards, which we did an industrial deal last year doing exactly that. And it was so interesting yesterday because we had this partner, you know, he's a lawyer by background. He's worked for all the big companies, Deloitte's and all of them. He was part of Redefine, which is a massive property fund REIT, and he did all their investments in Europe. And then he went on his own, and he's been doing German property for 14 years. And he specifically chooses a sector. And so what he went through with our mastermind clients was firstly, why Germany? I've already told you about the currency devaluing by 50 to 100%, the dollar to the euro. So, I mean, you should be thinking about the euro no matter what investment you make. By the way, Anthony, even in the equities markets, said there's good opportunity in Europe right now and in England because those markets have lagged behind the US. And so there's better value there than there is in America at the moment. That's in equities. But in the alternative asset space, you know, so he gave us why Germany. Then he gave us a strategy of the 7 cities. So most people think to go to the biggest 7 cities, you know, Berlin and Frankfurt and whatever. He said, don't go there because of the institutional capital. And you're basically fighting with people with a hell of a lot more money than you and access to cheap capital. Where the real value lies is in the next 40 cities. And he literally went through the different cities, where to invest, why to invest. Then he went through the different asset classes, which asset classes to be looking at, and where to invest and why to invest in those different asset classes. The who to invest with, you know, in my opinion, is kind of taken care of because you're dealing with someone that has been doing it for 14 years, has had massive capital behind him, so has had the access to buy whatever knowledge, you know, he needed to learn in that market, has this track record. And by the way, that deal we didn't get into was with him 3 years ago. They exited that deal in under 2 years and they made a 21% return. I think it was 21 or 22% return per year in 2 years in Europe. Like, it's kind of unheard of. But, you know, they took advantage of COVID and they had a great investment. And so it makes me cry myself to sleep because I wanted to be in the investment, but we didn't have the mastermind, couldn't participate. And yeah, long story short, you know, we now have this opportunity with 3 buildings that we can invest in with them. And my final comment is down to partners. You know, what's fascinating is they do all the due diligence themselves. They didn't do a single deal last year because they didn't find any deals that made sense. They put 10% of the capital in themselves. So whenever you invest, you know that 10% of their money is sitting right next to your money. And they also go out and get all the mortgages and everything at a far more effective rate. They're buying the building off a distressed seller who they've done previous deals with. So it's all about relationships. And it was so interesting talking to him and with Callio Private Equity and even Selwyn, with all of their family office and all of their money and exposure, was like, you know, why would you not do this through partnership directly into, you know, someone that knows what they're doing on the ground? And I think for me, it summed up 2 things. One, it summed up the vision of Wealth Migrate, which is allowing everybody to invest like the top 1%. Because previously with Peter, the only way to invest with Peter was if you had 250,000 euros or more. So you literally couldn't invest in a deal of his unless you had $250,000. You just watched me invest this morning from $10. So it literally sums up the vision where everybody has access to invest like the top 1%. And then at a mastermind level, it also sums up the vision of the mastermind, that people get to meet the partner, ask questions, work in a collaborative environment to get access to deals that previously just weren't available, and all the knowledge that wasn't available. So if there are no more questions, I wanted to finish on that incredibly positive story that each and every one of you that is here now has access to not only that knowledge, but also to those investments. And really, you're left with one of 2 choices. You can go to the platform and, you know, whether it's the learning platform under the university or whether it's Wealth Migrate and, you know, all the resources here, Shane's given it to you. So you can go and do all the different learnings. It's all for free, or not all for free. The home study courses you need to pay for. And or you can go and do the investments, and you can do it on your own, and or just like that medical example I gave you, you can do it with us. We can hold your hand, ourselves and Callio. We can build a plan with you. We can hold you accountable, and we can help you get results. And you really get to choose which one you have. But I leave you with one closing thought, and that's that having done this for 28 years, the difference between people that get results and those that don't are those that make a commitment and those that take action. And so my final comment to you, if you're still here after nearly 2 hours, then you have a real desire to diversify and to build globally diversified passive income. Whether you want to do it with us or not, that's your choice. Quite frankly, that's your choice. I only want to work with people that want to work with us, but please do something. That's my request. So, ladies and gentlemen, that's all from me. I am going to make sure that, Jana, what I suggest is, why don't you set up a call with Alex and the team? Just go to diversificationmastermind.com, have a one-to-one chat, and we'll be able to help you find the level that suits you as what your next best steps are. But yeah, my strong recommendation is use that link. Shane's put it in there, diversificationmastermind.com. I'll share my screen again quickly just so that everyone's got it. Set up a call. It's always important, if you want to get the answers to your personalized questions, to be able to talk to a human. We always joke we're a digital platform with a human heart. And so yeah, there's the link if you go to diversificationmastermind.com, and it'll be able to assist you. And I think, because I've got a hard stop at 11, my little TED talk went over a bit. Shane's going to give me lots of trouble because the TED talk's only supposed to be 18 minutes. Okay, let me see here. Have we answered everyone? Thanks for the kind words. I appreciate it. Ladies and gentlemen, that's our first TED talk. It took me 1 hour and 18 minutes, so I have to shave off an hour before I do my actual TED talk. But anyway, I hope you enjoyed it. I hope you enjoyed the FAQ, and we look forward to seeing your results. Have a wonderful day. Cheers, everybody.
Thanks, Scott. Excellent.